My friends, what is going on? Hope you had a wonderful week and weekend. Today we're going to be doing AMC's weekly outlook video. I have no idea how long this is going to take. I don't ever plan out these videos or anything like that, but we have got a lot to go over. Potentially could be a big week for both AMC and Gamestop. So I have no idea how long this video will last. If you find it useful and helpful, please like and subscribe to the channel. Comment, let me know what you think, good, bad, or ugly. Before we jump into the video today, you guys know the deal. I'm not a financial advisor. Everything I ever put out is only so you can become more educated and you can become a better version of yourself and the best investor that you can be, so that way you can make great decisions for yourself, your family, and your portfolio. Having said that, please follow me on Twitter. If you haven't done so already, Colin_Gladman. Easiest way to keep up with everything that is going on, and send me DMs, all that kind of good stuff. So let's get into it. We got work to do. So let's start with the option chain. So looking at this week's upcoming option chain for AMC, we have got, it's pretty loaded as far as calls. We've got at 1550, we got 4,800 contracts, 16, 5,400 contracts, 1650, 3,200, 17, 4,000. So lots of calls that are in the money currently and that potentially could go in the money. And then puts wise, we've got what's out of the money. I mean, it's just not a lot of open interest as far as puts go right now. At 1550, there's 1,400. I mean, but then it's under 1,000 contracts. Now, once again, this is as of right now. Obviously, that is going to change, but there's not a lot of puts that are going to be standing in the way. Now, there's a decent amount of puts that are in the money right now, but as far as what is in front of us, it's not too much. So the option chain looks very good heading into this week, especially if we can get a good overall market. So let's jump into the chart now. So this is what I was watching and tracking closely. If you follow me already on Twitter, you know this is what I was tracking closely on Friday, was basically this bull flag that we've been forming. So if you don't know what a bull flag is, pull this up real quick. So it's basically you have a big run up, and then it kind of, in that big run up is going to be your flag. So like right here, so like this would be your flag. Your pole area, and then it makes a little flag, and that little flag is going to be marked out what I have here in the blue lines, and then you want some consolidation in that flag, and then a push out and a breakout of that flag to get your continuation on the move up. So this is what I was hoping that we would get. Now, full disclosure, I thought it was going to finish in a cliffhanger, just like right here at the breakout point. And if it didn't break out here, then most likely path at that point in time would be some type of pullback towards the bottom of the channel and then a push back up. However, what we have been getting in this channel is once we made this low right here at 1473, then we were able to start, getting a push back up out of the channel. So we made a little bit of a higher low right here, started pushing up. If you follow me, you also know what I was watching as I was watching for the 1348 cross that was going to happen right here. I originally tweeted about it right here, and then we got pushed back down, but we held this uptrend from the low that started out on the day. We held that uptrend throughout the entire day, got the cross right there at the end, which led to the push out. And as you can see, those last few candles were all on increasing volume, which is going to be a good sign. Now, what does that mean from here? Well, from here, hopefully we're going to get some continuation, maybe even a push all the way back up to that 1610, 1614 level. But there's a good chance too that we could have some continuation, and then we run into some resistance like right here where we did at like 1563. Then we could come down here, retouch the top trend before moving back up. That path makes a lot of sense. Typically when you have a breakout at some point in time, you're going to have some form of a retest before moving back up. Now, it doesn't have to be necessarily this deep of a retest, but that's typically what you're going to see is anytime you have a breakout, you have a retest. That's when people will typically enter their positions. They don't, a lot of really good traders, they don't enter necessarily positions right on the breakout. They enter on the retest and look for the continuation on the push-up. If you follow me on Twitter, you know that I said it was risky. I entered calls right here, playing the breakout. The breakout happened and it was like 14-minute trade, made like 15% right here. So I do anticipate a continuation here come Monday, but I also anticipate some type of pullback. Now, like I said, it doesn't even have to be a full retest. The pullback can just be, a natural one. If we go over here and look at this, let's say we come up to right around here. Then like coming down here to like that 1527 area before a continuation and push back up, that makes a lot of sense. Okay, so just like the stocks don't go straight down, they're not just going to go straight up. So as of right now, this bull flag is showing a breakout. Now, some of that's going to also always depend on what the overall market is doing. But what I was tracking on kind of more of a micro basis is what I tweeted out, kind of this cup and handle right here. So this kind of rounded out shape and bottom where you kind of made a double top here and here. Then we would get the handle and then the push up. Now, typically, a cup and handle usually retraces right around the 30% range. So if we draw a fib, which I've already done so, but if we have a fib that comes from right here, which would have been our low on June the 12th, right around that $11.12 range, to our high up at that $16.14. You can see that right between the 236 and the 0.382 is going to be where, as of right now, we've caught our bounce. I'm going to hide this yellow line here real quick. And also too, on this fib, I went in and created just a 0.3 retracement, and you can see that would have been a 1464. So 1464 would have been a 30% retrace, and we came down to, well, what is that exact candle? 1472. So we missed a 30% retrace so far by 8 cents. Okay, so once again, TA matters, it works. Don't listen to the nonsense out there. So, like I said, from here, we want to see another continuation. We want to see another just kind of, this continued rounded bottom shape pushing up here towards another test of that 1615 area. Okay. Now, why is that so important? Well, I always do that. So, it's so important because right here, this is where we were holding support there for a while, but we couldn't get back over that 16. And then we topped out again right here after we kind of got this double bottom. Now we're testing it here again. And so we really want to see being over that 16 ballpark. Okay. And once we get over the 16, then I think that'll take us relatively quickly. I mean, we're going to have some work to do, but I think relatively quickly it's going to take us to the 19 range, and I'll show you why here in just a second. Now, if we go out here, let's start looking a little bit more macro, okay? So let's go to the daily chart. So we've got the 1348 cross on the daily. Hide that cup and handle. So we just had, back here on July the 12th, we had the 1348 cross on the daily. And historically, typically, this is very good things for AMC. We can see what happened back here in March. This one wasn't too great back here in November, but the previous one was a great move back here in August of 21. What was that move? That was a 45% move. So, oh, dang. Just messed up my line. Tragedy. Let's lock that bad boy, so I don't do that again. Sorry about that, guys. So, if we saw a similar move even from right here, that takes us back up into the $20 range. So, all very good things. You can see back here, this was a nice daily cross right here. That led all the way to the June run and everything along those lines. So, this cross is good. What I would like to see is, of course, I would always like to see the volume pick up. You guys know that. If you follow me for any amount of time, volume is king. But we also have the 20 is about to cross over the 50 as far as our EMAs go. I said that 1610 was going to be super tough to crack because I already talked about why it was resistance right here. But also look, it's where the 100-day EMA was coming down. Pretty much met that line right on the dot. So I knew we were going to get a strong rejection. And that's also too why I was both telling my Discord and Twitter that if you had option contracts or anything like that, it was best to take profits on those, even though all the Karens were super mad on Twitter about that, but it is what it is. So once we can break over this, and as you can see, the 100-day is now going to be moving below that resistance. So once we can get on top of that, once we get on top of that 100-day EMA on the daily, then that's going to give us the power that we need, I believe, to bust out and then start heading towards the 200. And as you can see, the next big level of resistance is going to be around that 19. Now, what also is going to be there by the time we get there? Oh, yeah, that's right. The 200 EMA is going to be there. So we're going to have some problems, in my opinion, once we get up to the $19 range. But let's not worry about that till we get there, okay? What we want to see now is we want to see the 20 crossing over the 50. Then we want to recover the 100. And then we just want to see the 20 constantly, recovering and moving up underneath all of these dailies. So, no, that's the 1348. Also, too, on the simple moving averages, we got the 20 crossed the 50 right here. Now the 100 is acting as resistance right here. So once we can get on top of those, also good things are going to be happening. Now, let's take a look at the RSI. So the RSI, we had a nice bounce down here right around that 50 range, which is what we want to see. We want to see good positive momentum. Right now we're sitting at 61. So we've got 10 points before we hit that 70 range, and then above 70 is going to be once we get considered into overbought territory. And you can extend on up into that. For instance, we got up over here into 80 on that March run, but you can see what happened after that. So we've got room to run on the RSI, but we do want to keep an eye on that. Let's take a look at the MACD. Should be crossed over. Yep, no, we got a crossed over. The momentum looks good. So RSI, constant upward trend. MACD, constant upward trend. Both of those are looking good. Let's go see what the weekly looks like. So the weekly on the simple moving average is going to be, we are above that now, and we're above the 200. So that is good. Let's see what we're doing on the EMA. So you can kind of see we got rejected off the 20 on the weekly. That's at 1584. So we definitely want to have a nice week, recover that, and then yeah, so that looks good. Let's see what we're looking at. RSI should still be plenty of room to run. Yeah, so we're only at 45 on the RSI on the weekly. So weekly time frame is looking good as well. Once again, we've recovered these key levels of right here. So this is why I kept talking about 1467. So it was the massive resistance area before we ran in June. You can kind of see just on a weekly basis that we kind of played out to an extent, kind of that cup and handle shape. Here, came across the bottom, came up, came here, retrace, and then boom, we went at that point in time. So not saying that's going to be what happens this week. I don't think that's going to be what happens this week. I think we got work to do. But we definitely are Anything north of this line right here, this 1467 line, is making me be more bullish than bearish. And obviously in the mega macro picture, we want to be doing that. We would just love to see basically this whole shape right here, just to kind of continue to play out over time. So that's kind of what we want to see. And above that 1467 allows us to keep making that shape. Now, let's go over here and take a look at GME. So GME, I tweeted out about this on Friday. Right here, this point was going to be important resistance. What I was worried about on GME when I tweeted this out is obviously there was a clear breakthrough. The selling pressure was picking up. I was worried it was going to come down here, come up here, retest this, and get knocked back down again. But it didn't. It recovered it very nicely. So on GME, ever since, what is this, May 25th, so almost 2 months, we've basically been trading in this range right here. So we definitely want to get above these two peaks right here, which would be right around 152, 153, to take us into bullish territory. Now, the only thing that I'm going to say about GME when it comes to this week and its stock split dividend is there's obviously, a lot of excitement and everything like that going into it. I just preach, stay cautious. If there's anything that the last year and a half has taught us is that, they'll come up with anything to mess with retail and everything along those lines. So just be cautiously optimistic, be excited, but like I said, just stay calm, take it one day, one level at a time. So GME, I didn't want to see it break, this previous, resistance where, we topped out, and then we topped out, and we kind of want to see the same shape here. So this one met resistance. Oops. Come on, British. Work with me. We met resistance, kind of made that bowl shape, broke out, retest, came back up. Now I'd love to see another bowl shape here, push up, maybe even break out all the way up here, then come retest, and then kind of do it again. So we want to kind of keep seeing those J shapes playing out. So that's what makes the most sense this week for GME. But like I said, just don't underestimate, the people you're playing against. There's a lot of excitement, especially for tomorrow, because I believe tomorrow is the last day that you can hold GME and, still get the dividend or the stock split dividend. So I anticipate maybe a lot of buying pressure, and then it might tail off the rest of the week, maybe kind of double bottom and push up. So a move where it's like everybody's excited, and then everybody's kind of waiting Tuesday, Wednesday, and Thursday and kind of drain back down and then start to make a move back up. So kind of a double bottom look right here. That would also make a lot of sense. But on GME, that little blue line right there, here's what's cool. So I tweeted out, wasn't even paying attention to this till I was really diving into the charts more. So from a daily standpoint, that blue line right there, look, that was also the 200-day EMA, right on the dot. Found it as support. So that is a very good sign. I didn't even realize that. So the 20 already crossed over the 50. So once again, AMC is kind of lagging behind this, guys. This is kind of what we want to see on AMC. So if I go back over here, let's go to the daily. Show you these EMAs. So we're about to start getting this move on the daily for AMC. So right there is where it crossed the 50. Originally got rejected once it crossed the 100, but now it's crossed here. It's using the 200 as support. I want to see this 20-day continue to cross the 200. Once again, this looks very strong. And GME is in right here, this big O macro pennant right here. Okay, so this is exactly what you would want to see in this. There's other pennants that we've been tracking, but I mean, this one looks good. Now, the danger would be if we get up here to around that 160 range. And I mean, once again, this is going to be, GME's big bear trend essentially that it needs to get over. So once we start getting, if we get a breakout, a little retest, I mean, you guys know GME. I mean, this is when you could really start seeing, some moves like that. But again, one day, one step at a time. Also, everybody keeps asking me what's going to happen to the chart or anything like that. So once GME does its 4-to-1 split, let's say it's at 100, is now it just going to show this massive gap down here to like 25? And no, the chart is going to reflect that. If you go look at stocks that have had splits before, like Tesla or anything along those lines, the chart just gets adjusted to show what the split. So the chart's going to look just like this. It's just going to be on lower levels. Okay, so don't stress out about that as far as if you're doing your charting. So AMC's similar big line that it's got to get over like GME's is going to be horizontal. I want it extended. So this is going to be AMC's big line we want to see it get over. Okay? Once AMC can get to, similar moves like GME, once again, this is not what I'm saying is going to happen this week, but if we kind of, bounce around, get rejected, break out, kind of retouch, then we can start, AMC can start making those kind of moves too. And that would be what I was talking about on this big old rounded bottom right here. We would just want to see that, slowly continuing, okay? Now, time-wise, level-wise, everything like that, all that is up in the air. But as of right now, this is what I believe the chart is telling me. I mean, we have traded right here. If you take out this March run, I mean, we have traded right here between $19 and $10 for essentially 7 months now. Okay, so this is a very solid range of accumulation in my period. In my opinion, we've had a nasty bear market that we've been dealing with. SPY, everything like that. Lots of really good companies have taken beatings and everything like that. AMC and Gamestop were no exception. So no guarantee that we found the bottom, but I said multiple times back when we were over here in kind of this $13 range and everything like that, I think we're going to look back and all wish we would have bought a lot more in those ranges. Certainly would have been true on that March run, but now we're back in here. And like I said, this looks good to me. Look at the accumulation that happened right here before the June run. Kind of same thing, trading in a range before a big push up. Pre-January run, traded in this range right here before the push up, and then once that push up happened, came up. Push up happened, came down here. Now obviously this was part of the buy button being taken away, but like I was telling my Discord, you had your accumulation take place, you had the markup. This accumulation took place basically at the top of this former range. Then you got the push up. This accumulation is taking place. A lot of this right here took place, and then you had another push up. And come down here. This did dip a little bit lower than I would have ever wanted to see, but now we're starting to get back into that bullish territory. So like I said, this is why this level of that 1467 was so important to me. And so right now we're holding strong, but we want to keep, seeing that, stay strong, because the minute we break down below that, it's going to be bull feelings are going to be gone. The minute it starts to break down here, then you can have a retest here, and then you can start, really struggling. So if we, start breaking these levels and we start making lower highs or anything like that, then everybody's got to be ready for, lower lows need to be on the table. They need to be in the discussion right now. Right now, they're not in the discussion for me because we're in bullish territory. Things look good. AMC is going to have a very good second quarter. Earnings are going to be on August 4th. So we've got earnings coming up on August the 4th. So it's a great time for us to be back into bullish territory for, a good earnings report to start pushing. We want to see that AMC is on track. What I love is when Adam Aaron comes out and he's talking about how, we're not just doing better. He's not going, full Joe Biden. And I'm not being overly political here, but like Biden and them are coming out and they're touting, all these great job numbers when nobody could go to work and we were coming out of a pandemic. It's like, let's see the job numbers compared to pre-pandemic. So that's what I wanted to see from AMC. I like that Adam Aaron is coming out and talking about we're not just doing better than we were post-pandemic. Of course they're doing better post-pandemic. We want to see that they're doing better pre-pandemic. That's what's really showing strength in the company. And that's what we're starting to see now. We're starting to see box office records being broken. So I fully anticipate, a pushback upwards. People ask me all the time, do you think AMC, do you believe in the play, all that kind of stuff? Number one DM question I get, do you think AMC is going to hit all-time highs again, or have we seen all-time highs in AMC? And my personal belief and opinion is no. I don't think that we've seen all-time highs from AMC. Now, I could 100% be wrong, but to me, where AMC is at today is a company is, to me, it's a $25, to $35 stock all day long. So I'm certainly not going to sell something like that in a company that I love at $15. Why would I do that? That makes 0 sense. I've spent way too much time, energy, effort, and money in this company to sell for lower than what I believe is fair market value, especially when all they're doing is talking about and working on ways to grow and improve the business, expand into different categories. It's just crazy talk as far as I'm concerned. So Big Kahuna Line is going to be getting over that $22 range. Now, why is that so important? Well, let's go into the cycle chart to finish up the video today. So here, if you guys have been following me for any amount of time, is what I've been tracking. I've been tracking it longer than March, but March, I think it was the 25th. Feel free to go back and check my Twitter. March the 25th is going to be when the first time I posted it, okay? And it was as everything was running in March, and I said, if we come up here and we get stopped out at 34, then we are going to take a nasty tumble. And everybody was mad at me and calling me a shill, and you should be happy AMC is squeezing and all this other kind of stuff. And I was like, okay, which is what I'm always like, okay, should be mad. So just like the pre-June run, there was a massive little mini run, then it got stopped out, and then it came all the way back down before continuing an upwards accumulation. And there were certain key levels that it needed to break through before that could happen. So we've got the exact same freaking thing playing out from an accumulation standpoint. Now, when I talk about cycles or anything like that, this is not slapping up bar patterns or anything along those lines. This is going to be similar patterns because I personally believe so much of the stock price is moving due to computer algos moving and manipulating the price to where market makers need it to be, so they are maximizing their money. So that's why you see so many repeating patterns, fractals, cycles, whatever you want to call them. I don't care. What I care about is breaking key and certain levels that match up the same. So this is going to be pre-June run. So right here, the first time AMC curled back up and was rejected was at $9.79, okay? Now, that was whenever it met its little bear flag right here, and then it broke down, and then it accumulated, pushed back up to that bear flag, and then it kind of made the J shape like we've talked about. So what level was that for AMC right now? Oh yeah, right around that $16.10 level that I've been talking about. It curled up and it hit it, and then it pushed back down. So let's go back over here. We'll go to the 15 minute. So where was that right here? Finally broke down right here from this 16 level. Came all the way down. Curled back up. And got rejected off the exact same level. Let me move this over here. in case I need to bounce back and forth. So what happened here? $16 level, broke down, curled back up, rejected off. Had to reaccumulate. Curled up here, rejected off. Had to reaccumulate, okay? Now, the next level, once it reaccumulated and pushed back up, was the next little bear flag that it broke down from. So where was that for us? Well, that was basically $19. So let's go back to this chart. Where's our next important level we're going to need to break? Oh yeah, it's right here. Same thing. Okay, let's go back. So we curl up here, we hit $19, and then what happened? Back here, we hit that $10 level, bam, got slapped down again, okay? So if we get slapped down again, and as you can see, it even broke that $9.80 level. So this was a pretty good size rejection right here. 5% rejection from, let's see here, at its high was $10.15, came all the way back down to $9.60. So it broke down that level. So obviously this is a much bigger picture. So what would that look like for us? Let me shrink this up a little bit so you can see it better. So that would mean right here, we would break on through, we would come up here to around this $19 level, and then we would get smacked all the way back down here, okay? And that would take us back to around $15. Then we would make another move up, and we would start zigzagging right here. We would break it the next time up, and then we would get up here to $22. So right here, orange arrow to orange arrow. What happened once it broke that orange arrow? Well, then we went to what I've always called the launch pad at that point in time. This was the launch pad before the June run. Major push up. Came back down here to retest this, and then boom, June gamma run. So that $22 level right here that we hit on March the 23rd, what does that look like? Let me go back to the daily. So that big line that I talked about and why it's so important, where's that line going to be? Right here in this $22 range. Okay? So that's what I'm looking for. Those are the key levels that I'm going to be looking for. So I think in the short term, my bullish case scenario, okay? My bullish case scenario is short term over the next week or two. We can push up to the $19 level. So excitement leading into earnings, push up to around $19. And then what happens after earnings? You guys know the deal with AMC. Bam! That's what smacks us back down. And then we start curling back up. And once we get to over that $22 level, then we would look for a good solid push up to around 31 to 34 level, somewhere in that ballpark. And then that is going to be when, oops, I always do that. One of these days I'm not going to draw random lines all over my charts. But that is going to be, once we get 19, come back to probably 15 to 16. Makes a lot of sense with earnings coming up. Then we can start looking for the big push. And then that push, in my opinion, is going to take us somewhere to around that 52 range. Okay? Because look, back here, where did it test? Tested right here, top of the previous range. So it got rejected, came back down, retested top of the previous range right here before it went. So what would that look like? That would look like this. So it doesn't have to be 52, but it could be up to right in here. So we'll see, okay? But anywhere in here between this, 44 to 52. Come up, retest the top of that previous range. So I think we would, kind of come up here, probably get rejected right here on 44, push up to around 52, and then we would have a big rejection back down to the 30 range before then we could really put, new all-time highs on the table. And that's going to take some time, I believe, okay? I don't know if it could happen this year or anything like that. That's what I keep getting asked. Is it going to happen this year or anything like that? Because that's probably from people wanting to load up on January calls or anything along those lines. So me personally, I don't do anything like that. Like I said, I take it one day, one step, one level at a time. So short term, that's what I'm looking for. I'm looking for the push. So I want to break that 16. I think the 16 will take us to the 19. Then I think we're going to have to come back to around that 15, 16 range, maybe even a little bit lower before we start pushing up. Then we'll break it again. And then, like I said, once we can really get over, this 22 area, then it's, I don't want to say smooth sailing ahead, but good things can definitely happen at that point in time. So I've been all over the place. This is what I'm looking for this week. So what am I looking for this week? I would love to see a break of this 16 and start making our way up here. May not get to 19 this week, but with volume and option chain, all things are possible. Please be smart about what type of options you are buying, because like I said, I think moving up here 17 to 1750 would be great this week, but if Gamestop gets real crazy, it definitely could take us to the 19. But like I said, we're definitely going to meet big resistance come 19, and it would also make sense on the daily that if we ran to 19 like this week, that's going to send the RSI into overheated territory, and that would give us the pullback range. So lot going on. I apologize if this was too scatterbrained. AMC setup looks wonderful, but we need to follow through. So overall, I am very bullish. I guess let's go ahead and talk about, just to give you an idea, because the setup looks good enough. In my opinion, there's not too much reason to be bearish unless we got another hard rejection off of 16, or if we don't even make it up to 16, we start looking at a lower high. Then a push back down here to 12. I really don't even want to see that, though. I mean, the big thing that we want to see, I don't know how much time this is going to take, so what we want to see is we just want to see, whoops, that's the horizontal line. There's one, the extended. We just want to see this continuation right here. Okay, so even if we rolled over and came down here to around 13 before we got to bounce back up. But I don't think that's likely, especially if the overall market can look decent or anything like that. I don't think that's likely. There's lots of bullish news, coming out for GameStop, and so. But like I said, let's just keep tempered expectations. Take it one day, one level at a time. Be smart. Trade the chart, not your heart. This is what I tweeted out the other day. And make the best decisions for you and your family. Don't diamond hand options, especially if theta is not your friend. Anything less than 30 days on option, and theta can really take over, and crush those options pretty quickly. If you're way more than 30 days out, then you got some time and some room to play with. But other than that, especially in this crazy of a market, if you look at SPY, I was showing my Discord this earlier, there's gaps all over the place. Pretty much just constantly playing out a series of rising wedges. We've got its big bear trend from March 22 that it's been rejected hard, not kinda, hard off of 1, 2, 3 different times. So maybe SPY is going to be like AMC and it needs that fourth test to be able to break out. But so SPY, a continuation, up towards 390 this week makes sense. But in the short term, it could also play out, doing one of these. Comes here, rolls over a little bit, test the bottom, push up, test the top, test the bottom, test the top, test the bottom, and then right here, my bias would be that's what's going to happen. It's just going to spill out and over. But if volume really starts ramping up, then, I'm not going to get bullish on SPY until we get back up here, over kind of this 415 area, and, we see this and we see the volume doing that with it. But right now, that is definitely not the case on SPY, because if you look at it, from right here to right here, that move is a 6% move, and the volume has nothing but decreased while the percentage has increased. That's not good. So this definitely tells me another spill out and over is coming more than likely. But we'll see, right? Literally every single second. This is what drives me crazy about the TA doesn't work, people. Literally every single second that the market is open, the chart is giving you new information that you need to be able to adapt to quickly. So TA is not a crystal ball. It's just giving you most likely paths. And if it starts to go down a different path, you need to be able to adapt and navigate down that different path. Okay, so that's everything I've got. Just taking a look at the option chain. We took a look at the AMC chart, the GME chart, little bit of SPY. Let's see what happens this week. Okay, so bull case for SPY would actually be, like I said, continuing push up to 390, but we're probably going to get some kickback around this 387 ballpark, which would lead to a 385. So I said it's going to be interesting. It's going to be interesting. Got to definitely keep our eyes on the overall broad market. But last week, there was a lot of days that weren't a good week that AMC and GME were holding up very nicely. And so that was awesome as well. Once again, please like and subscribe if this video was helpful to you. If you made it through the end of this video, I hope you're a more educated individual now. And I truly appreciate your time. Okay, that doesn't go unnoticed. So thank you. I really appreciate you. Have a wonderful rest of your weekend. I will see you guys on the Twitterverse. And if you're in the Discord throughout the week. Have a good one, my friends.